One.
Well, we found some sellers on the close on Friday, make it a 3-day losing streak. Haven't had too many of those. It looked like it was going to be 4 and more earlier this morning, but the bottom dippers are here. We're unchanged. We're going to talk about the inflation data coming up. We got Q2 earnings, and we got Tim Quast back. He'll be back at 8:35. And I have a question I'm going to stump Dennis and Mitch on. This is Pre-Market Prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to today's show. We're down just a couple ticks, 44.33 and a quarter. We were 20 handles lower for some reason, but we came battling back. Let's see if we can stay green on the session. The buck is up 12.5 cents at 102.07. Trying to find support here at 102. Man, bonds down a tick, 123 and 23.30 seconds. Crude back in the lower 73 handle, but down today 59 cents at 73.29. Gold desperately trying to catch a bid here in the lower 1900 handle, down 240 at 1930.10. Silver futures, they're down almost 7 cents at 23.02. And Bitcoin still above 30K. We're up just $30 at 30,400. So let's get this week started. And Triple D, you had to kind of buy the dip, sell the rip mentality. Well, Friday on the close, they came in with their selling shoes on. Big selling balances, or just people taking some profits from a uncertain week.
Definitely some selling into the close. There was a few selling balances. I wouldn't say that was the overall driver, but there was definitely pressure into the close. But what we were talking about on Friday's show, and I tweeted it out, the fade trade is back on. So where you're seeing moves where we move 20, 30 handles one direction, then we go 20, 30 handles the other direction, then we go 20, 30 handles to the other direction. I think you're going to get into a choppy period. I mean, we got a few days before we get into earnings season. The banks are really going to kick it off on Friday. Delta does report on Thursday, but I think you're in store for some chop here. So I don't think it's going to be smooth sailing higher. I don't think it's going to be smooth sailing lower. And I think if you're a contrarian, you might like the market that we're moving into.
Yeah, and in long periods of time, right, you can have consolidation, and then consolidation leads to bigger moves, and we certainly have the catalyst. Let's bring Buddy Mitch in here on this Monday morning, and I got a question for you guys, which you should probably get.
Uh-oh.
Let's do it.
We never get Joel trivia. He makes it too short.
What stock is on a 9-day win streak?
9-day win streak.
We probably haven't talked about it in a week and a half, but just quietly.
Ask the chat this question too. The chat was smarter than us. They're going to get it. Remember, Tesla had the big win streak and it broke hard. Well, how long was the Tesla win streak? Wasn't it like 12 days?
Oh, I think Tesla was
12 or 13 days. Oh, they're all over it. And I should have got it. The chat is so smart.
I didn't want to cheat.
This stock, here's another one. Yeah, I know. We can see.
Which one? Which one do you think it is?
It's Rivian.
Let's see. 1, 2, 3, 4, 5, 6, 7, 8. No, it's not Rivian.
Oh, it's not the one you were thinking of?
It's not Rivian.
It is not Rivian.
Chat, what you got, man? What you got,
Rivian for sure.
Yeah, let me
Might have to wake up. Might have to drink a little more coffee this morning for Joel Elconin. You know, he's a wolf.
No, come on, man. You guys, come on, guys and gals. How about, do you want a hint? Are you guys ready to throw in the towel?
Well, I thought Rivian for sure. So it's only 8. What's the 9?
Meta.
You guys are warm. I'm just gonna put it that way. You guys are warm.
We're warm with Rivian?
Yep.
Oh man. Lucid.
Nope.
Fisker.
It's General Motors.
Yep.
General Motors. They're
Motors?
not. It's not a big move, but it's kind of been up every day. Isn't that funny? It's GM.
Yeah.
Yeah,
$2.
GM. I should have known Joel's going to stay with the bigger company, then go to the little stuff. But that.
Yeah.
It doesn't look like a 9-day move because there's small moves. But I think you're right. It's just been up a little bit every day. I'm still long my GM. I sold half my GM. I did sell half my GM, and I moved that into, what did I buy last week? I bought 2 stocks. I'm like still staying at the 50% cash allocation. So as I sell something, I buy something else.
Oh, you bought?
Oh, I bought Generac.
In
Generac
MCHP. MCHP.
Yeah, and a little bit of microchip. You're right. I bought microchip. Those were 2 Chaikin stocks, and Chaikin's been pretty hot lately.
Oh,
so
there you go.
yeah, so I went with the little pullback in microchip there, and I also bought some. I bought some GNRC. And I sold half my GM. I didn't sell all out EKS. I sold half my GM, moved that money, some of it into GNRC, and then some of it into microchip.
All right,
All
Mitch,
right.
Small
take us away. Take us away, Mitch.
Let's talk about what's going on right now. We'll stay a little bit macro first. First, of course, China's producer price index saw a sharper decline than expected, dropping about 5.4% on a year-over-year outlook. The economists had predicted a fall of 5%. This decline indicates ongoing challenges with the Chinese economy and demand falling. Of course, looking ahead, we have some important reports also on the horizon. The Consumer Price Index report, CPI, is due out tomorrow, followed by the PPI on Thursday. These reports will provide insights into inflationary pressures and wholesale prices. So just be on the lookout, right? This is something that's going to change up everything. And I think that we might have a little bit of a lull in the market until we get the important reports on the horizon. And in terms of the Federal Reserve, we have several notable speakers today: Michael Barr, Mary Daly, Loretta Meister, Raphael Bosick. They're all coming out, right? And I think that today is one of those days where you just need to be watching out, because the Federal Reserve could turn this market. What we're going to keep an eye out for: any clues on their stance on future monetary policy decisions. Of course, what did the minutes reveal? The minutes revealed kind of like a back and forth from these members, how some thought that it should go higher, some thought it should stay where it's at. Let's find out who's the dove, who's the hawk. Let's find out.
10, 11, and 12, too, the way they stagger on the day. Barr at 10.
30.
Yeah. Daly at
ready.
11. And then Mester at 11. Bostic at 12. And then we get a reprieve until Bullard tomorrow.
I don't think we're going to
9 a.m.
hear anything that the market isn't already pricing in here. I don't think they're going dovish. They're still going to stay tough here. They're going to talk about the 2% target. I don't think anything changes here. Now Tuesday with the CPI data point, a lot of things could change.
Wednesday.
Is it Wednesday? Wednesday CPI?
Wednesday.
Sorry, Wednesday. Yeah, Wednesday CPI. So that could change a lot. So, make sure, you're hedged or whatever, you're making your bets before Wednesday. I think you're going to see chop here. I think you're going to see chop tomorrow, jockeying ahead of the CPI data. And then that's going to dictate the next move. Is it hot or not? Every time we come to these reports, it seems to, dictate the next move, and people can ignore this economic data, but it's important. I mean, you get a hot number and then that changes narrative again. So as long as CPI continues to tick down, bulls remain in control.
Yeah, and when we talk about inflation, one thing that I'm starting to notice is that, yes, energy prices may be, kind of just staying in the range, right? They're not really coming down anymore. And I felt like that's what really helped inflation start to trickle down. As energy prices don't come down anymore, will we still see that trend of inflation coming down? And I think that that's what the Fed is somewhat seeing, I think, ahead of us, is that they're seeing that it's not energy and food prices that are going to drive inflation lower now. Now we need the sticky stuff to get off, right?
Yeah. Do you know who's looking for a really hot number?
Who's looking for a hot number?
Predicting that?
Bond traders.
Yeah, what's a good call here too. The TLT now under 100. We talked about this being a risk for the markets as well. They're definitely pricing in that inflation has not been beaten. They're pricing in higher rates. bond traders have always kind of been smarter than equity traders when it comes to predicting the economy. Equity has a lot of noise. The bonds don't have as much noise, mainly because there's not as much retail participation. And also there's not as much, algorithmic, because a lot of bonds are still trade over the counter. So,
Yeah,
I mean,
they
you
are.
think about all that, it takes out some of the noise. So this is why bonds have always been a good indicator here. And it is a concern to be buying equities when the TLT is trying to break down to new lows. I mean, this is very perilously close to the 2023 low.
It is.
And then you go down to the October lows at 91. And again, equities can go up without bonds, but because the interest rate narrative here is so important to this market, it's very important in this market specifically to keep an eye on bonds. And Joel, I think, I'm very concerned that the TLT is starting to break down.
It's funny you made that comment about the high freaks and everything. I have a niece that trades bonds, right?
Yeah.
And I mean, a lot of it is like human interaction on the phone, different ways to communicate.
Old school.
Yeah, old school.
That's
In the
interesting.
bots, the bots are in there. So the only reason I'm nervous is I'm looking at the bond market here, not like bailing out of stocks and everything, but man, this chart. You look, I mean, and ever since, and no one believed Powell. Like, no, he came out a couple weeks ago and like, hey, we're pausing. I thought it was a hawkish pause. I'm the only one on Wall Street that thought it was a hawkish pause, but
no,
man.
I think there's a lot of people who thought it was a hawkish pause. I think it was as well. I'm with you here, but the point you're making here with the bonds is the equity markets are ignoring it, but it's a concern. And I mean, we still have this stock market here that did put in a double top. There is a double top in place.
Even more than a double top.
You look back to the 6th or the 15th of June, and then we're going to just June 30th, and then we're looking at July 3rd. We're looking at the high of July 5th. All 5 of those highs are all in the same area here. So resistance is very well defined. Again, though, it's hard to make a technical trade ahead of a key data point because the key data point matters. But if the bond traders are correct and that CPI data comes in hot, you now have a technical setup here where it could be tough to go higher. So everything matters. Wednesday is a big, huge number.
Before we move on to stocks, and I think I alluded this to, on the show on Friday. I mean, I know where resistance is, right? It's really well defined. It looked like we were going there on Friday. Like, wow, look at that, 76, man. That's 20 handles away from the high of the move, and it was like boom, going up seller, boom, coming up seller. Then when it came to the end of the day, we're like, whew. Man, we're pretty close to the top of that trading range. I can't sell on strength anymore, and they had to hit the bids. So support, I'll still go, even though we took it out, and this is kind of a weird occasion. We took out last week's low in the SPOOs at 44.1950, and I would have been like all for like the 4,400 camp. Well, we took it out by 9 handles, and we're back above it. So I'm still sticking with that 44.1950 on the downside. That's the key level. And then Dennis, I mean, you know that with the resistance. Resistance is resistant until it is taken out.
All right. Now, one thing that I will be also looking for later in the day at 3 p.m. Eastern, you'll receive the Fed's consumer credit data. And we've been seeing more and more how we're starting to see more issues in that credit, shedding light, of course, on borrowing and lending trends. Will this have an effect on the market today? I think it's just something to look out for. It's not something that we always watch, but it's something that I'll be watching as, of course, everyone's looking for what? Recession concerns, right? Some people are talking about how credit cards could go to 30% interest rates and higher.
I mean, credit card debt is the least of concerns. It's this, it's the other debt that is just mounting here, and where they're giving out. And I don't know if you saw on the weekend, but we were talking about, and maybe we did talk about it on Friday in Canada. 70, 80, 90-year
Yeah, you mentioned it.
amortizations now, because there's some products out there that keep the payments fixed, so they just extend the amortization out as the interest rate goes higher. And that's how far they've had to go out on some of these amortizations, because interest rates have come up so far that they're actually seeing 80 and 90-year amortizations on homes here now. People are never paying off their homes at this rates. So, I mean, I think interest rates are eventually coming back down. I don't think they're up here forever. But with the bonds still going the way they're going here, we're a long ways from getting out of the woods and getting out of this interest rate, issues that we have here. And that eventually shows up in the earnings of companies, because who else borrows? Companies borrow money. A lot of companies borrow money. It's a main reason, again, that probably the IWM has struggled to keep up with tech, because a lot of the mega cap tech doesn't have a lot of debt. So that's working for it, where you got a lot of other companies that do. So lots of reasons to still be concerned. Market continues to, overall the equity markets continue to shrug it off, but the bond markets are not shrugging it off anymore, and it's a concern.
Shifting gears, the Wall Street Journal reporting that Carl Icahn amended loan agreements following a recent short seller attack on his firm. Of course, Hindenburg Research stated in a report that IEP shares were trading at a premium of over 200% to the reported value of the assets. This move, of course, involves providing additional collateral and setting up a repayment plan. It's a development worth keeping an eye out on the market.
I don't know. This stock is really hard to trade here because it's all headline driven. You had the short seller report knock her down from 50 to 30.
That was
and then
big
there's
move.
the SEC's talking, or the regulators are talking, knocking down further. Then we get a quiet period and it starts to bounce back up. Now it looks like they're working with regulators, but at the same time here, this thing is so headline driven that I don't want to trade it, because I don't know what the next headline is going to be.
Couple good levels here. 32.58 is where you're currently trading, and you got to get into a gap area. I'm not looking to buy this thing at all. I don't even know where to buy it on the pullback. But if I'd been buying the dip off that last move, I mean, it did get under $20. I'd be looking at two levels. First of all, 32.86, which we haven't hit yet. That was your high on May 19th. And then, man, there's just a wall at 35 there. There's a triple top at 35 before it backed off. I'm not sure we're going to get to that $35 level, but got a lot of momentum. But that looks like the major resistance. And a little surprising here. I thought Icahn was talking tough at first. But, man, ever since he sold, remember when he sold Apple the day Warren bought it? I mean, that was a long, long time ago. But, it's just his picks, ILMN. I mean, we don't even talk about it. I mean, look at that stock. Isn't he been an activist in that one? I mean, just some other ones. He's been bearish, too. So, overall.
You just don't hear much from him
You
anymore
don't.
either. Like, we just don't hear on the media. It used to always be like Warren Buffett and Uncle Carl. I mean, there was so many times he's moving a stock. He buys something that pops 6-7%. We're just not hearing much. And when he does buy something, it's crickets. It's like he's lost his influence as well, which is a problem for these guys, because they make money off of their influence. We know, like, certain companies just go and buy a stock, then they disclose they buy the stock, and the stock pops up. So, I mean, there's, alpha to be generated just from their own name, but he has not had that alpha going for a while here. So that's an issue too. Lots of issues for Uncle Carl. And he's not getting any younger.
Yeah.
How old is Uncle Carl?
He's got to be pushing 80.
Oh, I think he's older.
Over 80?
I'm saying 85. I'm putting the over-under at 85. What's the chat thinking? I'm Googling it right now. Over-under 85.
I'll just be honest. I don't pay attention too much to his investments. That's just why. Because, I mean, he hasn't done great, at least in my investment.
I looked it up.
So
I looked it up. The over-under was set at a pretty good number. He's 87.
Wow.
He's 87 years old.
Yeah, we might need to look at some other investors, but that's just my outlook, right?
He's just not moving stocks anymore either, and he's quiet and, obviously aging here.
He's not Buffett. He's not Buffett.
All right, total tangent. This is going to be the only tangent of the week.
You sure? You sure about that one?
Yeah.
I'll take the over on that one.
So I was out of town and visiting my first great niece. Showed Dennis some awesome pictures, and I got a ride to the airport yesterday morning. This is not Carl Icahn, but I heard some really, really nice things about Bill Ackman. Really
Really?
nice. Yeah. And I'm not going to disclose them, but so nice that I'm going to try and get Bill on the show. I don't
Wouldn't that
think
be good?
Yeah, I
Let's
don't
get
think he'd
Ackman.
come. Yeah.
He
yeah,
might.
He might, but I mean, it was like it touched my heart. It really
He's
did.
very philanthropic. Am I saying
Yeah.
that right?
Yep.
We know that. And, if you even follow him on Twitter, which I do, majority of his tweets are about like helping people and doing different things. Like,
Yep.
I think like that's what I don't know Bill. Obviously, we don't know him on a personal level, but from what I can see from his public appearances and stuff, he cares deeply about, people. So
He also was
which is a
pretty
good thing.
bullish. He was pretty bullish during COVID. I remember that. I remember him making some. I remember he talked down, and then he came on.
He talked down, and
CNBC,
then he pivoted.
and then he pivoted, and then who was that other guy that they never bring on anymore? But he was like, "I'm out there. I'm out there buying stocks." It was right at the dearth of COVID.
We're talking Chamath or something?
No, not Thea. No.
However you say that name, you spit it all out.
Was it a Ricky somebody? A Ricky. Come on, chat. Help me out.
Rickies.
Yeah, there was
the chat for.
I know
man.
Ricky
They keep us
Steamboat.
alive.
No, come on. No, it wasn't Tepper. I'll figure it out. But like he really help me out, chat. Ricky something.
Help me out.
He had curly
We're not
hair.
on this one, Joel.
Chat's
not Ricky. Oh no, wait. Gutierrez?
No.
Ricky Steamboat. Ricky
No.
Lake.
Ricky.
Name all the Rickies you know.
Not Ricky Bobby.
Ricky
Ricky
Martin.
the Dragon Steamboat was awesome. I think we're going to
Ricky
take this tangent to WWF.
Ricky
the
Martin.
Dragon Steamboat? That was
No,
he was
not
solid.
Ricky Martin. No.
This is a horrible tangent, Joel. I don't even
Ricky
remember what we were
Martin.
talking about at all. I asked Ricky Lake too, but Ricky Lake's not there either.
No, come on. All right. No,
It's pretty
no,
Ricky,
What a
man.
horrible tangent.
Ricky
Ricky
Williams.
running back. Ricky, don't lose that
Slick
number.
Rick.
Oh, trust me.
Ravishing
Ricky was
Rick
very
Rude.
bullish. He was very bullish the cannabis industry.
No. All right, you guys talk. I got to figure this out.
Oh, Joel's
Oh,
bothering him.
man.
It'll bother him for years.
Yeah,
All right.
he's gonna figure
Bring
that
us
out. I will
back
bring us
on
to
the-
Helen of Troy. Let's.
Helen of Troy, the only earnings report of the day. Helen of
Yeah.
Troy. We all know we like to trade.
All right, I
Helen
know
of
who it
Troy.
is. I did it with one Google.
One
did it with
Google. That's all you
one
needed,
Google.
man.
Let's see if anybody got. Well, of
Ricky
course, I'm
Ricardo.
an
Ricky
expert.
Ricardo.
Okay, his second name begins with an S.
Don't give
Oh,
us hints. Just give us.
man.
We're sick of
Ricky
this game.
Sandler. Ricky Sandler.
Oh, good
Who's
lord.
Ricky Sandler?
Who's Ricky Sandler, bro? Like,
Man, you guys, I should take another day off.
Take another
Ricky
day
I didn't
off.
take a day
Sandler,
off. No way.
man.
Lucy.
Ricky
Lucy.
Henderson. Ricky
Lucy.
Henderson. No, he. Dennis, you probably don't even
I
know
love
who
it,
Ricky
Chad.
is.
I love you guys out there. I love all the Rickies out there. Shout out to the Rickies.
Yeah. Is there a Ricky in the chat? Yeah, we gotta find.
Shout
Okay,
out to
go,
all
go.
the Rickies.
No more Rickies.
All right, let's go to Helen of Troy as they exceeded expectations in Q1, reporting adjusted EPS of $1.94, sales of $474.7 million. They also provided revenue outlook for fiscal year 24, expecting it to be between $1.965 billion to $2.01. Definitely getting the lift. Helen of Troy stepping up to the market today.
What the hell does Helen of Troy do? I see.
I
the
don't
stock
know,
all
but the
time.
name
I've
sounds
never really
pretty
known what they
badass.
do.
I actually looked at Pro this morning. I'm like,
What does Helen of Troy do?
They stand up to germs.
No, they're a retailer. I'm not really sure the retail, offering creative products and solutions for its customers through a diversified portfolio of brands. And it looks like
Helen of Troy brand. We're gonna-
food prep, cooking, cleaning, organization, outdoor and on-the-go
Told you,
activities.
fight those germs, man.
Yeah,
Vicks.
beauty and wellness.
Beauty and wellness. They own Vicks. I see Vicks there.
Thermometers,
Vicks, that's the good stuff.
water and air. Yeah, yep.
I'm looking at their brands right now. So, okay, well, I'll think of them as the Vicks company then going forward. I actually just bought one of those Vicks humidifiers. I'm going to return it because it's like a piece of junk.
Oh,
So it even says when you're like,
Alright.
if it doesn't like produce humidity or steam, drop some table salt in there. And if it doesn't, do it again. I'm like, when you're already trying to troubleshoot something that you've created, because my last humidifier I never had to drop table salt in it. So anyways, it's a piece of junk. So
Here you go.
I don't know if that's all their junk, but the Helen of Troy
I'll help
Vicks
us all
product,
out.
don't buy that Vicks vaporizer. It's no
Why?
good. Doesn't produce steam. That's its only job.
Here's some brands here just from the website so that we can at least.
Well, I'll tell you right now, they don't
help
own
our viewers
Honeywell
out
brand
here.
though, so this is false advertising.
Well,
wait
they
a second. Honeywell's written
These are
on there. I'm
part of
pretty
their
confident they don't own
brands.
Honeywell.
It's a partnership.
Yeah. So
I'm
now
sure
maybe
it's a
they don't own
partnership.
Vicks either. I just noticed Honeywell's up there.
Yeah,
Maybe they're just a partnership with Vicks too. Okay, we take everything. Revlon, I think that's its own company. Okay, I don't know what the hell they own.
The company refers to Honeywell as
they
a
refer
leadership
to
brand.
Vicks, so they don't own anything
Okay.
really. Okay, we're done with Helen.
All right,
Troy.
man,
I'm not even doing a technical.
Boy, I got you guys off on the wrong
man.
foot today, man.
It's Helen. Helen and Troy, baby.
Okay,
Yeah.
I'm not buying it, and I don't know where to sell it. But if I was, and I was a pre-market trader, and this thing got to 125, I'd be like, "Are you talking about the February high, near the February high, 125.99?" So if we get to 125, I think you see sellers in that handle all the way up to 125.99. Where to buy this thing on a pullback? Your guess is as good as mine. If I was a longer term investor, I'd say, maybe in the lower 114 handle. That tops it. That's the top of Friday's range, but I don't think that's a good level for today.
All right, let's talk about on the earnings front. Of course, we have a lot of major companies reporting this week. Delta Airlines will be kicking it off, and PepsiCo on Thursday. And then we get, of course, the banks on Friday morning. The financial sector will include like JP Morgan, Wells Fargo, Citi, BlackRock. Of course, these reports will provide valuable insights onto the performance from key players and really start giving us an outlook into the earnings. We'll kick it off first. Let's do Delta. We'll take a look maybe at Pepsi, and then we can bring the banks together.
I was long Delta over the weekend for the simple reason is that I play that trade. You be long stocks that are going to report this week, and it works here again. I've already sold it here in the pre-market. It's up 0.92%. The S&P's up nothing, so it's a nice alpha extraction there too. PepsiCo, same story. It's up here this morning. JP Morgan is up relatively to the market this morning. So that trade continues to work well here, just being long stocks that are due to report. Delta's has been flying. I mean, the bar for the earnings is going to be high. I'm probably going to be still playing it from the long side in and out from the long side until Thursday, and then it reports. But there is a high bar here.
Would you be nervous if you're on an airplane and you're thinking to yourself, man, I feel a little drop, like little drips of water, and you're thinking, wow, because I did read this one plane had to land because of a crack in a window. Would you be nervous if you
Did you have drips of water?
Well, I mean, that's probably water concentration.
I couldn't figure it out.
It's just probably from the AC.
So you just flew and there was water dripping on you from the ceiling?
Well, it was more the guy in the seat next to me.
Well, there you go.
That normally happens from the AC.
Mitch is right. I didn't want to hit my my call button, but it was coming. It was coming from the AC.
Oh.
So
I've been in a couple old cars. He'll do it in the old cars also.
Dallas is selling into a good area. I mean,
I'm not selling yet. It's I'm talking Thursday.
Yet?
I'll be buying. So full disclosure here, I just sold, but I will probably rebuy again as it pulls back. Just playing. Man. So I'm playing, chop like this. So buying all dips on Delta. Into the number. So bias long into the number, not doing any shorts on it.
Air highs right now, 48.39, 48.35 is your two daily highs. High of the move, 48.52. Closing high, that would be in 48.82. So it's a good place. I mean, you bust through 49 ahead of the report, you're breaking out, but I'd say we stay under 49 until that print on Thursday.
It's going to be big resistance at 52. That's going to be a big number, psychological number. Has not been up to $50 since 2021 when everything was in the bubble.
This is why I think we had an amazing investment opportunity on these airlines
We did.
to get them down there, and
We
now they've taken off. It's going to be very, very hard to ever get them down there. I think back down. Something crazy would have to happen. I
Well,
feel like.
valuation just, a recession would have to happen. That's how they're going to get back down
Yeah,
there,
but
they're
my
going
thing
to
is recession
but-
would probably also bring the oils down, so that maybe that would help them out a little bit because
Yeah.
they have been getting more money per seat. We know that. They definitely passed
They're
down
killing it.
the
This
expenses.
is as good of an environment for the airlines as we've ever seen. Delta has said that.
Yeah.
They're seeing, just unbelievable environment for them. So I
What a
mean,
Pepsi.
they have set the bar for themselves very high.
They're much more efficient too. They're not like it. They
fill the
well, we ran
planes.
the snack cart, and they're like, oh, well, a little turbulence, no snack cart here. Here's water. They're just
That's all you
not
get is
spin-
water.
Or they'll
Yeah.
just cancel your flight.
There's
If it
no
doesn't
free
make
food
sense.
anymore. You pay for your luggage, and people just do it. They don't
Yeah.
give you anything anymore. It used to be they give you a supper, they give you a meal. They don't give you anything anymore. You pay for everything, and what did they call it? They called it like there was a name for it when you'd pay for your suitcase, and you pay for your lunch, you pay for your drinks. The name is
nickel
really
and dime you.
the name.
Nickel
Well,
and
the
dime
name is
you.
really nickel and dime you,
dime
but they
you.
came up with like a decent
That's
name.
really
The
what
chat
it
would
is.
know it too. It was like decoupling, but it was something like
I saw the other day, Frontier Airlines was charging $110 for your first check luggage.
Who was?
Frontier Airlines.
That's more than
That
your
sounds
tickets
awesome,
you
right?
pay on Frontier.
That sounds awesome, right? $110 for your check bag. Better yet, you want your carry-on? $140.
that's just gone
No.
ridiculous.
Yeah.
They
I
say
promise
they
you.
lower the ticket prices.
They lower the ticket
So-
price, but then they
but
pass it right
They
there.
lower the ticket prices by like $1, and then they charge you $100 for your thing. It's like, well, we're lowering ticket prices so that so people who don't put the luggage on there.
Yeah,
can
we
have a
got
cheaper
you.
Flight.
We got you. What about Pepsi? I don't think this is one that I want to own right now at this time, but
Been out of favor. Been
Consumer
out of
definitely out of
staple.
favor.
Yeah.
Dividend is not high. 2.75% in a 5.5% environment. I hate these stocks. right now.
Well, let's talk also maybe about the bank and the financial sector. What about this area? This is going to be an interesting one to definitely take a look at. JP Morgan's pulled back, caught a little bit of some support at resistance. What are you guys thinking?
I think it reports Friday, so I think you're biased long into the report, and then we'll analyze after the report. But I think the report will be decent. So I actually don't mind the JP Morgan setup here. It's kind of in consolidation station. It looks to me like it wants to go higher here. I'm not long it here this morning. I wish I was because it's up a little bit more. But I think there's an opportunity here at JP Morgan. I think it sets up well for a pre-earnings run.
What about the banks that benefited, from the crisis? And I don't know, which. I mean, I know J.P. Morgan did a bunch of stuff, but then Silicon Valley Bank went out of, I think the ones that were furthest away, from the problem and have the furthest exposure, being going to the reports, but. You're going to find out this report if there's any skeletons in the closet. Comerica is one that I bought on the dip. I bought the JP Morgan on the dip. So I think, this is the quarter where they come out and say, oh, yeah, we got. I mean, doesn't Bank of America have like $1 zillion of bad bonds on their books? At rates like that. So, all they need to come out and say, yeah, we're going to peel off a tranche of that. And
I'm not so worried about the big majors. I'm more worried about these regional reports that are going to come in. And, obviously, there's some people who aren't worried. Schwab's catching an upgrade here today. And not that Schwab is a bank, but they've kind of coupled it in with the regionals we know is trading like that. You get State Street reporting on Friday. That's probably a more interesting report than JP Morgan and Citigroup, because you're getting into the smaller regional banks. Let's see what they say, because we know it was a tough quarter. Obviously there was probably some withdrawals, for some of these smaller names here. Are they seeing recovery? What are they seeing? How's it going? I'm very interested in the regional banks, not so much the majors.
How about this? We kept talking 45, 45, 45 in the KRE. How about 40 now on the downside? Starting to, I mean, it's not as good looking as 45, but
Some support
there you
there.
go. Yeah, I mean,
Range.
It's just calm. It's like, whoo, I take a deep breath. Okay, not all the regional banks are going out of business. All right, so we're 40 to 45. I mean, I know that's a wide range on a $40 instrument, but
But
just
you're right.
technically speaking, you know.
Yeah, channelingstocks.com. It goes right back to that. We're getting in channels in a few of these things. Buy at the low end, sell at the high end, and then you retire when you're 35, like that guy on TV. Mitch don't remember that commercial, maybe.
No, I don't.
He was in.
Is it? We ask this like every once a quarter this comes up. Is it still a website? Channelingstocks.com. Is it still out there? Does anybody still go to channelingstocks.com?
No, Dennis. I
remember the kid.
I
and he was
normally,
like,
I normally
how
look
did you
at the
retire
channels
already?
myself.
With channelingstocks.com. Buy low, sell high. The same.
You could have done that on
again.
GE all year long, and you could still do it.
It works, man. I'm not going to argue with their strategy. I like it.
It's there.
Man.
It's there,
It's a good
Dennis.
strategy.
Now celebrating 25 years in business.
25 years, man. Just candle it, man.
Is the kid still on there, or he retired? Actually, did retire?
They look like they got a
They
website.
got a new kid.
Yeah, I don't know what they got, but they're trying to.
You
Remember
should pay
when?
us for this advertisement. I like
what?
channels.
You know what? They're no, they got a guy on from. I'm not sure. They're not showing any kids, but you remember the Bright commercials used to be on like before or after those. Remember when Bob we did some advertising?
Yeah, we did some advertising. Bright Trading did some CNBC advertising.
Yeah, I remember that.
They were kind of crappy commercials. They didn't put enough. They didn't have enough budget in there.
Hey, it happens. All right. It's 8:37. You guys know what time it is. It's Monday. Let's do it. Sound that alarm.
Bushwhackers.
Tim Quast, baby. Let's go. All right. What's going on? How we doing, Tim? How's it hanging?
I don't know how to answer
That's
that.
an intro.
That's a good one.
Monday.
It's a professional intro there, Mitch.
Oh, I mean, it's Tim Quast,
Trust
baby.
that it is.
I'm gonna
That's
take
all.
a little
This
break.
is my
here.
friend right here.
Yeah. Okay.
Yeah.
The
How
show
we
has been
doing,
all
Tim?
over the place here this morning.
Not
So,
my
Hey,
fault.
it's a Monday.
It's a Monday in July, no less.
Oh yeah,
Good
in
to see you
the
guys.
middle of summer, right? I
Yes.
mean, I'm sure you're having a good time out there right now, especially enjoying the good weather. Where you at right now? Where in the world is Tim Quast?
In Denver. We're in Denver, and it is lush and beautiful in Denver. We were riding bikes yesterday, and I swear I'm not making this up. On our bikes, the grass along the paths was as high as I am. I mean, it's just unbelievably beautiful and green this year. We've had a lot of rain, and I mean, usually it's brown by this time here in Denver, and the reservoirs are full, and everything's lush and beautiful. So we ought to just all leave and go out and do that, right?
Right? Enjoy the outside. That's what you're telling us, Tim. But
right. It's beautiful.
no wildfire smoke.
No.
Did you get any Did you get any over by you?
yeah, how was Colorado with the smoke?
We've had very little of your Canadian smoke.
I know.
Dennis.
That's what we export. We export smoke now. That's our main export.
It's good that you can export it, right? Send it east.
The tariffs are really low on it.
But it is funny, Dennis, that you mentioned that, because we are amused by how, generally in the summertime in Colorado, you're going to have some smoky days, and no one talked about it. Right? It's never on the news. And then it shows up in Chicago and New York, and all of a sudden, whoa, the world's falling apart. There's smoke. Well, welcome to reality, East Coast. So
so you've seen this in past years where you get a little bit of wildfire smoke coming down.
Yeah,
right.
Yeah. We deal with it on a daily basis over there. But the good thing is you're in the Sunshine State, the true Sunshine State, Tim. Let's go ahead. Let's get into the market. Let's talk a little bit about what we've been seeing. It feels like it's been all sunshine this year in the market, and we're wondering, will this ever turn around? Let's take a look underneath the data and see what Market Structure Edge is showing us. What are you seeing, Tim?
Well, I'll tell you this, if you remember when we were talking, when I came back from Greece, first the week I came back from Greece, because when I just leave, right? I just leave and everything works out. But when I came back, I said, if you look at the data, the market structure data the momentum opportunities coming out of May expirations were the best since January. And if you looked at the technical signals, there was no indication that the market was going to do very well from the middle of May to the beginning of June. But the data showed it. The data showed it. So that's my setup for. I'll show you what the market structure. If you haven't tuned into this before, I think of this as the behavior of money behind price and volume, the mechanics of the market. There are rules and regulations and processes, the way that the market works, and that to me is crucial. It's crucial for it. It's what Dennis and Joel, Mitch, you guys know. It's the mechanics of the market that actually determine what's going to happen. So now, as of this, July 10, here's what the data look like. The broad market sentiment is 5.6. 5.0 is the bare minimum. So it's fine, right? That's not bad at all. Momentum. The momentum portfolio, looking for things across the, call it 3,500 stocks that comprise the national market system in the United States, there are 4 that show up as a momentum opportunity. Coming out of May options expirations, there were close to 30. There were 35 in that portfolio in early January. And that's how you can trade momentum. And how do you trade momentum? Well, to me, this is from a market structure standpoint, you want supply-demand imbalances and you want to take a piece of volatility. That's what you're after. You can't just go trade volatility with no idea what the supply-demand balance is, because you will get caught out. Citadel knows more than you do. So the only way that you can turn the presence of Citadel in the market to your advantage is to know where the supply-demand imbalances are, because then Citadel will fill your order. If not, they won't. Your trade won't get filled. But right now, Mitch, this is the answer to your question. There are 4 in momentum. You cannot.
What are they?
That you can't. And great. And I'd like to use one of these as an example, actually, of how to trade momentum. But these are it.
Yeah.
There's Carvana, believe it or not.
Wow. That stock has been
there we
going.
go.
That's Kenny Glick, buddy. That's a Kenny Glick pick. He gave us that last week, I think. I wasn't on Monday because Tim would have been here when Kenny was on. CVNA. He was actually complaining about it that hadn't gone yet, but boom, Kenny all over that one.
And realize it's a challenging trade, because volatility in Carvana is nearly 10%. So how do you trade Carvana? Well, if Carvana is down 5%, that's half of the volatility. If you you could put with a stock like this, you have to put your stop further below that. And then you have higher risk, but you'd have to put it a good 200 basis points below that. So if the price is 29.5 and you buy it down 5%, so what's the math on that? Call it 27.85, right? Something like that. So then you put your stop at 26.85. But that's a pretty big risk. But there's a very high probability that today, tomorrow, or the next day, mathematically, we study this math. Very high probability that you can make 2, 3, 4%. Stop thinking that, we're going to go make 100%. That is not how the stock market works. That is the way to poverty. If you want to try to do that, you will lose your entire trading account. Don't do that. Just take what the market gives you. But that's so Carvana, Matador, Unity, and Coinbase.
Unity is an interesting one here, that it's still in your momentum, because Unity has actually had a bad 4 or 5 days here. So, I can see why Carvana's in there. I can even see why Coinbase is in there, because quietly Coinbase has went straight from 50 to 80. Yep. Unity is interesting. It has been strong from 30 to almost $45 there just a few days ago. But 4 or 5 days ago, it broke down, and now we've come back here. Why? One, and why is this still in your momentum? But 2, I guess, maybe this is an opportunity to buy the pullback.
Well, here's how I think about this, Dennis. And by the way, what you're looking at is closing price. That's the gray part of the graph. Demand is the green part. That is an algorithm that's just metering buying and selling by everybody, and the effect that it has on midpoint prices, because call it 90% of trades are derivations of midpoint. So how prices behave relative to midpoint is a big tell on what everybody's doing. And then supply is short volume. So if supply is falling and demand is rising, the opportunity to, no matter where the price closes. I mean, I traded CRM. I traded a bunch of stuff last week. On the worst day, Thursday, Dow down 500 points. I had a very good day because I don't care where it closes. I only care. There's only one thing that matters: entry. If you have an entry, the exit will take care of itself so long as your exit is, call it 2%. If I'm after 2%, I really don't care where Unity is going to close. What it's telling me is that I have a very high probability of making some part of 3.6%. Well, it's very good. You know, I've running our internal model, just an internal model with our data. And we set some criteria, including risk management. When should you be in the market? When should you be out? That portfolio is up 37.2% through June 30 this year. So and it does this. It says, take 180 basis points of Unity and do that over and over. Don't chase. I mean, when everybody owns NVIDIA, that's great. But when everybody goes to sell NVIDIA, it will not be great. So you have to realize there are other ways to approach the market. Long story short, there's not a lot of momentum in the market, but you can still trade it this way.
All right, so let's take a look at where the money is going, right? Because it's not necessarily where the puck is today, but where the puck is going to be tomorrow that matters, right?
Yeah, so let me do this for you. So this is taking the edge data, each of the sectors, right? So there are 11 market sectors, and looking at all of those stocks and what percentage of them are bottomed from a demand perspective, which of them are, how much are heading down, how much is topped, and how much is up. Well, if we just look at the up, 60%, 61%, you would say, well, the money's going to energy and real estate. That's where it is. You know, that's good to know. Notice Matador is 25% of the momentum portfolio, one of four, and it's an energy stock. The trouble with this is that this can be consumed like that, because put those two together and they're 6% of the S&P 500. So in a single day, BlackRock could consume all of the alpha in energy and real estate because they'll consume it. All of a sudden it's gone. So by Wednesday, this could no longer be the trade. But right at the moment, you look at this and say, well, if I'm following BlackRock, it's going into energy and real estate. You say, well, there's no sense in that whatsoever. Who cares? That's not how the market works. The market is not driven by the drivel that you hear all day on CNBC. It is not bottom-up fundamental analysis. Equities are a product. That's what they are. They're an ingredient in recipes called balanced target date asset allocation models. And at the moment, the thing that is available is energy and real estate. Okay, that's where it is. Again, it could be gone by Wednesday.
All right. Now, of course, one thing that we need to know is, how do we trade this environment? You know, no matter what the market does here, Tim.
Well, I'll tell you, and here's to me, if you had to say how you trade it, is just what I told you. Like, if you want to go trade Coinbase, buy it when it's down half its volatility.
All right.
And take 2 or 3%. But
can you do a setup for us? You know, just using your system on Coinbase, because it's obviously a momentum stock and it's had a lot of momentum. Am I sure, you know, buying dips on Coinbase has worked tremendously well over the course of the last 3 weeks, because the stock has went from 50 to 80. Set us up just, you know, the stop loss, you know, and the probabilities, and how you actually would set up this trade in COIN using your market structure edge product.
And I traded it. I traded it several times last week.
Excellent.
It's dangerous because it has a lot of volatility. But sorry about that. So here's the deal. There's demand. Notice demand is just slamming into the ceiling, and supply has diverged. Yeah. That tells you that Citadel is more likely to fill a rising order than it would otherwise. So now let's get to the setup. I'm going to go look at it in the momentum portfolio, and I'll show you exactly what I do with this. So if we go over here, the first thing I'm going to check is the volatility. How much and volatility is merely the rolling 5-day average of how much Coinbase moves from high to low every day. So if it closes at 78.72, that's where it closed Friday. and it has 6.7% volatility. So I'm going to say if it's down 5%, this is what it was last week. It was down almost all of its volatility. So then I buy it there. If it's down 6% from 78.72, do the math on that. Call it 75 and a half, right?
Sure.
Something like that. Maybe thereabouts.
76.
So then, okay, 76. So then I put my stop 50 basis points down. Now I might get stopped out, right? It's a risk because that's still within the volatility. But I now think that the machines are more likely to lift the price than lower it. Doesn't always happen, but it happens 80% of the time. Well, that's a pretty good bet, right? So then I put my limit. I just want a small amount. I put my limit in 2.5%. All right. So I buy those at the market. Maybe I buy 400 shares of it. Boom. Market 99 shares at a time at the market. Just like that, because I get immediately filled. And then I put my limit in 2.5%, my stop at about 50 basis points down, and I just walk away. I don't care. It's good till I cancel. And one of the two is going to happen. 80% of the time, I'm going to make 2.5%. That's what I did on Thursday. I did it in CRM, did it in multiple stocks. And so that's what you do. And why does that work? It's because Citadel et al. Prices are set by machines. 98% of trades are algorithmic. Even your trade, if you were using E-Trade, Ameritrade, Schwab,
for sure.
are all algorithms, right?
Yep.
You put an order in, it's an algorithm. The algorithm is going to calculate the probability that your trade can be filled profitably. If it can't, it won't get filled. What we're doing is saying we know there's an excess demand and insufficient supply. So if the price is down, the probability is it's going to rise. Now, it may not last. It could be gone by the end of the day. But that is what you're turning to your advantage. You're saying we know how machines behave in the market. They move stuff past the midpoint. If it's below the midpoint, there's a high probability it goes up. That will not work unless there's a supply-demand imbalance, however. That's how you do it. Works very well.
And that's what it's all about. And you can either spend years learning some market structure, or you could maybe use a service like Market Structure Edge to help you understand this better. So definitely check it out, team. I'm going to throw up the link in the chat here. Always great to have you on, Tim Quast, Market Structure Edge. If you guys want to reach out to Tim, feel free. He does webinars. He also teaches on this specific of how to use Market Structure Edge so that you guys can find your edge out there and get a free 30-day trial.
Live Thursday demo, 2:30 p.m. Eastern time.
There you go.
Yep.
There you go, guys. If you guys want to tune in for more, check it out. Market Structure Edge. Always good to have you, Tim.
Thank you, guys. Good to see you. Have a great week.
All right, let's get back to the market. How we looking, Joel?
Leaking.
Yeah, we
pull.
Man, struggling to go green here. We did just momentarily. One thing that I like to look at as well as that closing print. You know, that closing print 44.34, and I don't do it every time, but like when the last after hours print is 4 handles away, I kind of like, that's kind of like my pseudo close, because we got hit hard, right? And like everyone that didn't cover the shorts into the close, they are out there. And interestingly, that last pop that we just got when we started the show got real close to that after hours closing print at 5 p.m. That's when Dennis still has 3 more hours of work to do. That was 44.38.50. So really the onus on the bulls early is to get not only green, but man, we got to take out that pre-market high and suspend a bit, and sustain a bid, or else I think this 3-day winning streak is going to be, or 3-day losing streak is going to be a 4-day losing streak.
All right,
It's a sneaky 3-day losing streak too, because it doesn't feel that bad. Like, I mean, the IWM had a wonderful bounce off the 180 support here again. I mean, is that bounce to sell? Is there just, we just in this contrarian market where Tim is saying too? I think Tim's right. I think you're taking 2-3% gainers all over the place here, because I don't think they're turning at 8-10% gainers in this market. I just don't think we're in that environment here. We've run too far too fast. I think we're due for a sideways market for a bet.
And it's very hard. Oh, go ahead, Joel.
No, I was just going to say the IWM, same technical setup with your daily highs. Look at all those tops in that area. And then the Qs, I mean, boom, the expiration top, it hasn't been able to reach. And then also with the triple Qs, you just got to harken back to like, look at this resistance in early 2022.
Yeah.
370.10, 371.83, 369.31. Let's just call that whole area 370. So very, very well defined resistance in the markets, in the indexes.
Yeah, we'll see what happens. And it's been the tale of that when we do get that down move, a lot of times we get that kind of little rapid move back up like we got on Friday, where it's going to stop out a lot of people on moves like that when it comes right back up and then just gets smacked overnight. And what do? Today, you're like, man, I would have been deep into the green this morning. But yeah, like always, we got to keep our risk management in mind. So one thing that I've started to do is understand that, especially when I'm going into kind of these shorting positions, that I either have to be quick to the green or give myself enough room to deal with bounces like this in the market right now, which is very difficult. I'll be honest. It's not easy to see the SPY go up, let's say, 5 points and then smack down in the last hour 5 points too. That's not a common
20
move.
points in the last hour.
Yeah,
because
that's
it
not
really got hammered on Friday.
Yeah,
5 points we can stomach. It's these other bigger ones. And again, it's a tough setup here too, because if you're playing little momentum trades here, you're getting stopped out on a lot. Bringing it right back to Tim's point, which was an excellent point. I mean, he's playing contrarian strategies within overall bull market. So he's buying the dip on strong stocks and selling the rip on exactly what we preach, is using his systematic approach to do it. So, I mean, the strategy in itself makes sense. Here's, a Coinbase, which has been in an uptrend here for about 3-4 weeks, gets a 5% pullback. It's high likelihood people are going to come in and buy the dip. And that's what he's playing. It's just that likelihood that those dip buyers show up. One thing is you've got to watch where you're placing those stops in this environment, because when it's choppy like that, you get stopped out on a lot of stuff. So you almost got to go a little wider, which is somewhat concerning for traders who are very good risk managers to go wider. But when you're chopping around, you got to have a little bit wider stop so you don't get caught.
Yeah, that's what I'm noticing more and more. So just be careful out there, right? Let's learn from it. Let's keep an eye out for it. Last thing that I wanted to bring up, I saw Joel, of course, he caught a good one here, as Walmart being featured on Barron's cover, emphasizing its transition towards embracing high-tech solutions. It's interesting development that highlights the ongoing shift in the retail industry, shifting into a little bit more high-tech and maybe some AI to help them out.
I mean, was Barron's waiting for a pullback to put this out there? Because Walmart had a significant pullback there, and now they come out, and calling Walmart, I mean, they're buying the dip here too. There's a dip here. The problem is
not much of a dip.
Retail's been such a mess. So, Walmart has been unbelievably strong compared to where, some of these other retailers are. Not in the last month. Some of these retailers come back, but overall, I mean, look at, Target. I guess Target's got its own problems, but that has just been ugly. Kohl's has come back in the last month over $24 there. I'm just going through some of the other retailers. Amazon has been strong, but we know Amazon's got the AI story powering it here. I don't know Walmart. I just feel like it's I feel like it's just too much of a consumer staple for me in a 5.5% environment. Why do I want to buy Walmart?
Yeah.
I compare it to treasuries. If I'm going to the market, I want growth. And you're not going to get growth in Walmart. Not a hell of a lot of growth.
Now, I know you made, you said there was a pullback. There's no doubt a little bit of a pullback. Didn't quite make the all-time high. I don't know. For me, this has been such an extended run here since June, up at the, from 145 to 159. I'd say if you're playing it from the long side here, this 153.50 area is pretty important. It was your low on Friday at 345. You had another low at 314. So I don't know. I mean, two big red candles coming in. I'm like, not super excited about this one. And Walmart hasn't had one of their like famous quarters, where they kitchen sink it and it's horrible and they pound it and then it makes a bottom and comes back. I think I'd rather wait for for one of those quarters here for Walmart. WMT, way off yesterday's high too, folks. 156.29. So if this is going to run, the market catches a bid. You're still $2.50 away from Friday's high.
All right, let's wrap it up.
Yeah.
And with wrapping it up, I'll just bring up outlooks. I know Goldman Sachs is maintaining its base case scenario on the S&P 500, projecting a range of 4,200 to 43. So if you guys want to take a look into that, that's just something to keep an eye out for. I know that we're looking at the SPY, and I feel like, who knows, man, the first half of the year was really strong.
It's great.
I feel like, if anything, what's not to say that we don't just come back into this range some and then just end up the year just slightly up. I don't see too much more that this bubble can really drive us. Does this bubble drive us to new all-time highs? I just don't see it.
If you're buying stocks here, that's what you're saying, and it's possible.
Yeah,
that's
what
we're not out of
that's
the
what you're
realm
saying,
of possibility.
right?
There's all possibilities. I'm very much convinced that zero people know where this market is going to end up.
100%. I agree with that one. I'll take that one.
Some markets are easy to call, and some markets are just like really hard to call. So that's why I think you got to take the Tim Quast approach, where you're taking small gainers. You're protecting yourself with some stop losses, because this could be a trading environment where we just chop around. We may go straight up, we may go straight down, but the one thing you can extract alpha from is little market inefficiencies. Jumping in, getting ahead of earnings, pre-earnings runs, all those stuff we talk about. Getting into momentum, buying strong stocks on dips, selling, weak stocks on rips. That stuff all continues to work. So just don't get married to trades thinking, yeah, I'm going to buy here. End of the year, we're going to be up 30 more percent. I'm going to just kill it. I mean, I just don't see that environment ahead of us. But again, I don't think anybody can predict this market. So if you're saying, oh yeah, we're going to do this or we're going to do that, you're throwing darts against the wall and you might get lucky. And CNBC will interview all those people who got it right. But there's a lot of people who are going to get it wrong. So I'm not trying to call this market as much as I'm just trying to look for little market inefficiencies and little setups and taking those little gainers. And on that note, I'm going to hop.
Okay. You look at that April and May price action. It started to look like you're going to bust out in May. You didn't quite. It waited till June, but you're talking about a 2-month period of consolidation. And just for the S&Ps and for this, I mean, we have our resistance. I mean, if you're in that, I mean, I keep playing it up to that area. If it busts through that area, man, 4,500, you gotta strap on the bull hat and ride it up. But we're just hanging. We're hanging after the expiration. Quiet range. We'll see. We'll see what happens. See if we can hold last week's low. That Globex low. I'm gonna ignore for right now. 44.11 1/4. Right now, focus is on last week's low. That was made on, I believe, on Friday. Or excuse me. No, that was made on Thursday. So great job today to Mitch. Everyone, go out there and kill them. We'll be back later on.
All right, we're going to wrap it up here. Like always, guys, smash the like button out there. We're going to bring you guys over to live trading. That's coming up next. And I do want to tell you guys about the book club, of course. And we're getting into a new book, Going Market Wizards here, guys. Let me know if you guys have read this book before. If you guys haven't read this book and are looking to get interviews from top traders, check it out. Jack D. Swagger, Market Wizards, of course. We're going to be getting into this book, starting it just this Tuesday. So if you want to join, go ahead and click this link. We meet up on Tuesday night, 7:30 p.m. Eastern. And this is really my way of giving back to you guys out there. Really, it's not required of me by Benzinga. It's just something that I wanted to do for you guys out there, giving back, paying it forward. I really believe that that's what life's all about, right? Trying to find mentors, trying to find books, trying to find knowledge. And nothing better than getting with a group and actually talking about this with actual real life examples, looking into the market, maybe seeing if we can relate situations. That's what it's all about on the book club. So if you haven't checked it out, I definitely recommend it, and only can join if you hit that link. If not, can't be part of the book club. We'll see you there on Tuesday. Smash the like. Don't go anywhere. We got a great week for you right here on Benzinga, the #1 place to not only bring you the new technology opportunities, but of course the trending investments that are out there. We'll bring you now over to live trading and see what money we can find today. Is it that type of day? We're going to get into some good green. Let's find out. This market comes down today, or does it stay within the range? I have a feeling we might get a little bit of downside action, but I don't see it cutting down to 430s just yet. But stick around, team. Find out on live trading what stocks we're trading.